Hey everybody, welcome back to Investing with Wesley. On today's episode, I'm going to give you a playback of something that took place last Friday. Last Friday, I tried to go live here on YouTube, but for some reason it was acting up. So I went live with my wife on my Instagram account instead. In this live episode, this was really just a Q&A with topics and questions that you guys had in regards to 2021 goals and finances. So although it's too late to get your question in, please feel free to enjoy a replay of this live stream, and who knows, maybe someone had the same question you'll have. With that being said, let's get into it.
Yeah, so I'm Brenda Caruso. I'm his wife, and he asked everyone on IG to see if he had any questions. We received a few, but more than anything, we're also going to talk about financial goal setting for 2021 since we didn't receive a whole lot of questions. But yeah, so I'll be asking the questions and you can answer them. But I think a good place to start is kind of going over a reflection over our finances over the last year, and any good and bad decisions made. So you, being the finance guy, you handle our finances primarily. So what's your reflection of our finances over the last year and the good and bad decisions that were made?
I'd say a reflection of our finances was that a lot of things happened in 2020. We paid off the remainder of our debts. Pretty sure it was this year we decided to do velocity banking, where we did the line of credit method. Mm-hmm. We paid off a bunch of your debts, as well as some of the financial decisions were, should we spend money on advertising? Should we spend several $1,000s on a new setup, like a new laptop and editing software for my YouTube videos, as well as getting your personal trainer certificate and business coaching. So there was a lot of money that had to be spent, and I think weighing out whether it was a good investment or not, because it's not like a stock or bond kind of investment. It's an investment in yourself, which depending on if we use the knowledge or not, can reap rewards. So I think for us, 2020 went really well financially, and like I said, we paid off a bunch of debts and really focused on growing ourselves and our own businesses.
Yeah, I would agree. I would say that 2020 came with a lot of surprises. A lot of them were very much unexpected, as I'm sure everyone would agree. And I think this year was very expensive for the both of us. We had a good chunk of money saved, and due to various financial decisions made, our savings was kind of depleted from that. But some of them was an investment in ourselves, education, teaching, or more like learning. Investing in ourselves primarily is a lot of it. What it was. Do you think there was any bad purchase or bad decision that we made?
No, off the top of my head. I'm sure I could think of something, but no, off the top of my head. But while we're reflecting on finances, I just want to praise report for us having that emergency fund that we had, because the couple thousands of dollars we had to put to fix in the water main, and
our water main broke. That was
May.
Yeah, in May. That was a few $1,000s. So that was a big thing that happened this year. We also needed to pay for new tires for my car. Yeah. Because I had a tire that popped, and then with an all-wheel drive vehicle, you can't just replace one of them. You have to replace all four. So that was something that we weren't expecting either. So a lot of big things happened. So yeah, kudos to us for having that. Okay, what are some ways or some advice that you have for us, or even for your viewers, on ways to better prepare or spend their money in 2021?
Being that the state of the economy is what it is right now, and we'll get more to that in a later question. Being how the economy is right now, I would say the best advice for us and you guys going into 2021 would be to focus on paying off your debts, the debts strictly that have greater than like a 4% interest. So like if you have like a 3% on your house, don't really focus on that, or like a 3% on a car. You don't need to focus on that right now. But like credit cards, personal loans, that kind of stuff, definitely need to be paid down if you carry a high balance on them. And either at the same time, or if you're just not in that boat, also focus on limiting the pointless spending that you're gonna have. So pretty much just save as much money as possible, but not necessarily in a savings account. Depending on where you are in your personal finances and where you are in your own personal journey, you may want to put it into a savings account temporarily, because I believe we're going to see the mother of all dips coming, I'm going to guess within the next couple of years. So you could either rack up as much money in savings as possible so that you could buy in, but with the government printing a lot of money, we'll also see a lot of inflation. So saving money cash like that over time, you're also going to lose value, so it's kind of like a trade-off. Or if you don't want to store money in cash, then put it in safe value investments, and be as diversified as possible, even into other countries. That way, when the U.S. markets do dip like crazy, you're better protected financially, and you don't lose your savings. So that would be, going into 2021, I would say focus on paying off debts. If you have no debts, then focus on either investing to beat inflation or saving so that you could have a large deposit of cash to invest when the right time comes.
Okay, so kind of going off of that then, some people have already received their $600 stimulus check. And so whether it stays $600 or whether it ends up being $2,000, how would you say is the best use of that stimulus check? How should people use it? What should they do with it? What's your advice?
Again, it's kind of case by case depending on where they are in their journey. But I would say as a general answer, it kind of is the same. Either use it to pay down debts if you have high interest debts. Use it to invest or put it towards savings for a rainy day. Like if you don't have an emergency fund already set up, throw that in there just as a rainy day. It's better to have it and not need it than need it and not have it and have to take on debt with like a credit card. So with the stimulus check, I look at it just as, in a sense, free money. Kind of like if you get a tax return, that's like, it's money you overpaid to the government, but we don't get into that.
Okay. If someone was interested in investing, what would be, and they know nothing about investing, what would be some advice that you have for them?
If they know absolutely nothing about investing,
or where they would put their money, if they receive the $2,000 stimulus check and they want to invest in it, what's your advice?
Well, if they know nothing about investing, I would encourage education first. You can always call up, places like Robinhood, E-Trade, all these other brokerages. If you call their customer service line, they have, like E-Trade specifically, shout out to them, because I've been on the phone with E-Trade's customer service for more than an hour just getting like free education. So if they know nothing about investing, watch my videos on YouTube, you know what I mean? And then call like a brokerage that you're interested in, like Webull, there's Webull, TD Ameritrade, there's Robinhood, like there's thousands of brokerages out there. So start there with education if you know nothing. If you do know a little bit about investing and you just have no idea where to start but want to start now, then I would say search up the ticker symbol SPY, which is an ETF, and ETFs are generally less expensive on the fees than they are with a mutual fund. So search up SPY, it's an ETF, and it's designed to track the S&P 500, which is the United States' top largest 500 businesses. So if you know absolutely nothing about investing, you're at least diversified enough. You're all in the United States, which is risky, but you're diversified across a bunch of different asset classes, like tech, consumer, like electrical, energy. Like you're diversified across the United States' largest 500 businesses. So that's a good starting point. But again, if you're wanting to take a more active approach in your investing, then you definitely, and you know nothing about investing, they should definitely contact me or some other investment advisor to get free education.
Mm-hmm. So, one thing that I've been thinking a lot about, while the stimulus checks, and so just for reference, we haven't actually received our first stimulus check.
Or
so
our tax return.
So we don't know what we're going to do with the money yet. Probably invest it in some way, or pay off debts. But one of the things that worries me, especially with the second round of stimulus checks, and depending on whether it stays $600 or bumps up to $2,000 a person, I'm a little worried about inflation, or I should say a lot of worried about inflation.
Should be a lot of worry
So,
about inflation.
Could you talk on that a little bit?
In its simplified form, inflation is the devaluing of money due to the printing of more money. So kind of like supply and demand. If there's a lot of supply and there's just printing more and more supply, the cost of said item or the value of said item goes down. Mm-hmm. So inflation at its most simple form is just the devaluation of the US dollar over time. And over the long scale, it's averaged about 2% a year. So if you have $100, by the end of 2021, it'll be 2% less valuable. And then by the following year, that will be 2% less valuable. So it just slowly erodes at your savings. And that's why people like myself recommend to invest, because when the government creates inflation, it kind of screws over the lower and middle class that aren't investing. Because when they print money, people have more money to spend, and they spend it on big businesses. So when inflation happens, the actual value of the dollar in your savings account goes down, but the value of corporations, portfolios, and investments go up because they're getting more money. So to beat inflation, it's always best to invest and obviously diversify, like we said. But we should be very worried about inflation because I don't know his title. I don't know if he's like chairman or whatever, but like the top dog of the Federal Reserve said in his most recent press release that they intend to keep interest rates at zero for as long as possible, well within a recovery. And although we're in a recovery, we're not well within it yet. So low interest rate means it's really easy to borrow money. Mm-hmm. And what with the continuous printing of money for stimulus packages, whether it's for businesses or for us, the people, as well with printing even more money for something called quantitative easing, which is basically when the Federal Reserve prints money and buys financial assets with that money. So they'll print, $2, $3, $4 trillion and put that into the market to boost market returns. That's why you saw the stock market crash in, the early parts of 2020, but then recover really quickly. It wasn't a real recovery. Our economy is still pretty crappy, but it looks like a recovery because several $1 trillion have been flooded into those assets, boosting the value of everything.
So it's not just the stimulus checks that is going to cause inflation; it's that quantitative easing as well. Mm-hmm. So trillions and trillions of dollars.
Mm-hmm. It's quantitative easing, it's the stimulus packages, and it's loosely also, it's so cheap to borrow money, and borrowed money is fake money. So when you flood the markets, whether you're buying shoes or buying stocks, you flood the markets with a bunch of fake money, it devalues what little real money we have left. You can actually Google it. Around 20% of all the US dollars in circulation right now were created in 2020. So that's how much money they created and printed out. That 20% of all the US dollars were created in 2020. Wow. So a lot of inflation is coming.
Okay. Okay, so what do you think are some ways that we can change how we see, spend, or use our finances? I think you and I, so like you said, we spent a lot of money, this year for us has been pretty expensive, I guess, financially. Some of it was an investment, some of it was unexpected and emergency, emergencies happened and we needed to pay for stuff. So as we, come into the new year, 2021, what are some ways that, even just for you and I, or ways that you see people, using their money, spending their money, or even how they think about their finances? What's some advice that you have for us?
Figure out the goal you want long term and for 2021 itself. And whatever that goal is, whatever your spending is, make sure it's in line with that goal. How people view finances, like money, like the actual dollar bill means nothing. Mm-hmm. It only has value because we say it has value. Just like people are only gonna buy if they think it's worth what they're buying. The new PlayStation is a perfect example. People are spending $1,800 getting a secondhand PlayStation 5 when they could just wait a couple months and get, when they make more, get it for the normal retail price. But people find it worth that. So make sure whatever you're buying, it falls in line with what you really think it's worth and what your financial goals are. So like one of our financial goals for 2021 is to save and invest as much money as possible and like really rack up, our nest egg. So, Starbucks, going out to eat, is that all worth it? I did a video on millennials spending about $6,000 a year on like just tedious things. Like it was like $2,000 went to just Starbucks alone, like spending coffee. I think it was like $2,200 was going out to eat, and like $1,900 was buying clothes. And like, not that any of those is a bad thing, because we should all still enjoy our money, but to spend that much money in a year, when the same article I was referencing in that video said that they were spending more on that than actually saving for their own retirement or investing for their futures, buying assets, that kind of stuff. Yeah. So really just, if that's your goal to, just live while you're young and spend your money, then, have fun with it. But if your goal is to take a more active approach and save and invest for the future, then, rethink those expenses.
What are some practical ways, like if you see that the way that you're using your finances, the way that you're using your money isn't aligning with your goals, what are some practical advice that someone can do to better manage their finances?
It depends on how much willpower they have. But I would say sit down and create a budget that is in line with the goals. So if your goal is to pay down debts, not necessarily invest or save, but just strictly pay down debts, create a budget and outline, what are needs, like you need to spend money on either rent or your mortgage, gas, transportation, like figure out what your needs are, what that number is. Then figure out how much money you've been spending on things that are called wants. And these are like going out to eat, buying clothes, buying shoes, things that don't need for your existence, but you just want because it makes you feel happy. Mm-hmm. Figure out how much money you've been spending on that. And then figure out where you could cut back. You can always cut back by just not spending money going out to eat, not door dashing, that kind of stuff, right? Like that's an immediate, but then you could take a more active approach and start looking for better insurance, like car insurance that is the law in California. You could find a broker and see if you could save money. They actually recommend you call a broker every 6 months to see if you can get a lower rate. So, saving money there. But then take that money that you found within your budget that you've just been, in a sense, wasting, and contribute it towards whatever your goal is, whether it's investing or paying off debts. Yeah. The reason I say it's all depending on willpower is because if you have the will to just do it, then, good on you. Mm-hmm. But if you just, aren't really paying attention and losing a bunch of money to tedious spending, I'm going to get a Monster while I fill up at gas. And, that starts to add up. If you're that kind of person, then American Express, they're my favorite card company, but American Express, I know for certain, you can actually set spending limits based on like sector. So on entertainment, you could actually set $100. On transportation like gas, oil, that kind of stuff, you could set $150. You can set it to where that card won't even freaking work if you go over budget. Wow. Which could be scary, if you could be stranded, it won't let you spend money on gas, but yeah. if you're take the time to do your budget well enough, you won't have to worry.
Yeah. All right. Well, that's all the questions I have. Are there any other things you want to talk about, or for those of you watching, any questions? I'll see if I can read them from here. Well, do you have anything else? Any advice for 2021?
I not necessarily for 2021, but about like the economy, the huge dip that I talked about earlier. Mm-hmm. No one has a crystal ball, so like I can't tell you it's going to happen this year. I can't tell you it's going to happen in 2022 or like anywhere. I honestly have no idea, but I do know that based on all the graphs, all the research, like based on every real piece of data that you could look at, everything is overpriced because of inflation and because of just our economy works off of debt and there being so much debt. We're expecting a giant downturn. When you're starting off learning about investing, you learn that like stocks give you growth, but you buy bonds as like a hedge or a protection from the stock market going down. Because typically when stocks go up, bonds go down, and then vice versa. But we don't see that anymore. Because of inflation and because interest rates keep getting lower, prices of bonds that are already in existence, because that's how the bond trading market works, prices of bonds are going up. But because of inflation and the printing of money, so are stocks. So you see both stocks and bonds skyrocketing, and like, what's your hedge? If everything is overvalued and what you thought was a hedge, like a lot of people have a 60-40 portfolio where it's 60% stocks, 40% bonds, but if both of them are overvalued and like way overpriced, where do you place your money in the event of a downturn? And the downturn is coming because typically a government, whether we're talking, medieval times or current times, when the government is more than 60% over leveraged with their, just running off of debt, they'll restructure it, default, go bankrupt, whatever they need to do to get that debt under control. The most common ways are either defaulting and just like the value of the dollar kind of, it gets devalued to a point, but because no money was printed to pay off the debts, like the value kind of remains where it's at, or it gets inflated away, which I think we'll see happen because the government just loves printing money right now. So you'll just see hundreds of trillions of dollars be printed out to pay off the U.S. debt. And when that happens, obviously, $2 trillion of quantitative easing is scary for inflation, but a couple $100 trillion to pay off the government's debt when the market does clean, like, when that happens, if you're not investing in the market, the value of your dollar is going to be garbage because several $100 trillion have been printed to pay off that debt. So even if it's something like easy and diversified, like the S&P 500, like you're better off. You're not necessarily safe, but you're better off in the event of a liquidation like that. But we can go off averages and predictions and what should happen, but it's not guaranteed. Like if you take Japan as a perfect example, Japan is, I want to say, like 80 or 90% over leveraged. So they're way past the metric that is used to figure out when a country is going to go default. But they're still going. Like, they're still pretending everything's okay. So, although all the warning signs are going off, like, you don't actually you don't see the brick wall you're headed to because, sometimes you could just play pretend and keep going. But just know that a giant correction of the bond market and the stock market and the U.S. economy, because we function off of debt, is coming. And if you're going to invest in stocks, I would make sure to do research on the actual company you're buying into and not follow the fads. Like, a lot of people are investing in Apple, Tesla, Bitcoin, right? All these things are that you could consider a fad, but actually research the company if you're going to put your money into it, because you want this company to also have a lot of cash holdings. That way, in the event of a giant downturn, they don't have to go bankrupt. Mm-hmm. So like Apple is actually a pretty good company. They have several billions in cash holdings. It's the only reason I put money into Apple, because I think they're overvalued. I think pretty much all tech stocks are overvalued, but Apple has a lot of cash holdings that could survive a big plummet like that. Mm-hmm. So if you're going to invest in stocks, make sure you're actually researching the company. And if you're going to invest in bonds, just don't. Because you're getting less than inflation in interest of the bond, and they're already way overvalued. So why pay a premium for weak returns? It just doesn't make sense to me.
So what's some hopeful advice that you have? So it's not all doom and gloom in 2021. Or even in the years to come. We want to have good years, or a good year this next year. So what are something that we're doing, or some goals that you see a positive, you see some light at the end of the tunnel?
Perspective-wise, it's how you view it. Mm-hmm. So the facts are the facts. We're way over leveraged. We're bound to have cycle amounts of inflation. Those are the facts. It's only doom and gloom if you're not It's only doom and gloom if you're not investing or if you're way over leveraged in debt. Mm-hmm. If you have a lot of debts that need to be paid off, it's doom and gloom, because in the event of a giant dip, you could potentially lose your job, just like we saw with the coronavirus. So if you're over leveraged and can't necessarily afford it, or you don't have an emergency fund, it's doom and gloom. If you're not in the stock market, it's doom and gloom, because you're losing money every year due to inflation, and especially soon we'll see things like hyperinflation. So, you're losing money there. But it's not doom and gloom if you start now and take the active approaches, if you focus on paying off your debts. That way, in the event of a giant downturn and you either get fired or your pay gets cut with furloughs or whatever, it doesn't hurt that bad. Mm-hmm. Or if you already have done that and you don't have any debts, put money into the stock market, try to diversify it as best as possible, seek counseling like myself or some other investment advisor to know where you should put your money, because when the inflation does happen, you'll be protected from inflation. Your money will grow at the pace of inflation. And another little bit of good news, if you're on the right side, is until the big crash happens, the more money the government prints, the more your investments will do well. So if you're in the market right now, and let's just say we don't have a plummet until 2025, for these next 5 years, you're going to have really good growth, because they're just throwing money into the market. Mm-hmm. And then obviously you want to take a more active approach in you as a family, and not necessarily as like a economics, country thing. Mm-hmm. So we've talked a lot on paying down your debts, but see how you could save money on taxes. Mm-hmm. A lot of people have side hustles that they just do, they'll get something free or really cheap off Craigslist, paint it and resell it. You know what I mean? They'll flip items. You could do all of that, and in a sense, the government will never know, mm-hmm. right? Or you could incorporate, spend a little bit of money up front, getting an LLC or just some sort of doing business as. And then all the money you spend on materials like paint and all that, all those things are a tax write-off. So if you have more write-offs than income coming in, you save money on taxes that way. So I would encourage people, wherever they're at, seek more education on how to save money. And then whatever their goals are for 2021 or the future, use that saved money for those goals. All right, guys. Well, thanks for tuning in. Baby, you want to cut the feed?
Sure.
Bye.
Bye.